And okay, so this is the talk about how to value an early stage startup. Welcome, everybody, and nice to see you all here. And I hope that I can answer everyone's questions. We'll see what we can do with that. So I will start sharing. I do have a presentation, and I've decided that I'm going to be very unprofessional and kind of leave it up like this, because I want to be kind of hopping back and forth, and it's easier for me to see where I am if I do that. I'll do a quick introduction to myself. I'm Martha Chamberlain. I've had 2 startups with positive exits. I've been angel investing about 20 years. I've invested in about 80 companies. I've currently got about a 3x return, about 20% IRR. I also mentor companies, about 8 to 9. I'm the co-founder of Mossy Ventures, and Mossy Ventures helps startups. At least the idea is to help both investors and startups move forward in your journey with that. So that's me. All right. Good question. Determining fair market value. Oh, here's Sirius. Great. Hi, Sirius. Welcome. I don't know if he can actually hear yet. So I considered putting in a slide that said everything I'm going to tell you is wrong, but I thought that would be too negative and that everybody would just turn around and leave. But I will try, as you know, as a lot of you mentioned as you were coming in, it is very tricky to know what is the fair market value, and the earlier you get with a company, the harder it is to know. There are some basic things, even if you think about it, even with something as stable as a house, it can be hard to know what a house is worth. It depends on what people are willing to pay. And so I found this quote: pre-revenue valuations vary between 2 to 5x. So it is a huge variation, and there are no absolute answers. But I will do my best to tell you about my experiences and what people in general, what investors in general, I think are looking for. I normally say I'm looking for 3 things in a company, and that's team, team, and team, which is kind of a joke, but not entirely. For the Y Combinator, they normally say they're looking for team, 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 idea, and product. Another thing that is very important in a startup is the relationships that you have, and then you go to market, and that there are a lot of other things that people can be looking at, that people are interested in. Team is very important. Another thing that I say and believe about that is the right team with the wrong product is a better investment than the wrong team with the right product, because the right team will figure out that they've got the wrong product and they'll pivot. But the wrong team will go down the path and be committed and will not correct where they are. So team is very, very important to me. I'm going to go over just really quickly where funding might happen. Perhaps you've heard this, friends, family, and founders. Some people call them fools at this point here, which is very early, and it's when money is often going down. Then angel investing, and then early stage venture capital, then venture capital, so like a Series A, a Series B, Series C, like that. And this is often called the Valley of Death, because not more money is going out than is coming in. A lot of times will happen with that. So that can be a problem. Welcome, Parag. Thanks. Nice to have you joining us.
Thanks, Martha.
Another thing that I want to say about this is that it looks like it just goes down and then comes up, and you should be aware that sometimes it kind of goes up and down and is kind of bumpy and maybe not as clean as this. All right, I'm kind of hoping that you're familiar with this idea. And all right, now I want to show you something real. Oh, Parna, Great. This is fantastic. Thank you all for joining. Parna, welcome. Glad to have you here. So I'm going to go into a cap table that is an actual cap table that was given to me by a company I was working with. I've cleaned everything out, and I hope that there's nothing that distinguishing, but it's kind of interesting to look at what someone gave me as their actual value. All right, so this was I was investing. I think I was investing at the series. No, I must have been investing at the seed level. I don't usually do Series A. So startup, new investment, and this is what the founder put in was $1,000. And so he said, okay, the value of the company is $1,000 because I've just put $1,000 in. Now, then he did some math with that, and he said, well, I want to have 10,000 shares, and that means that the value of each share is 0.00001. All right. And then he distributed the shares and the value and that sort of thing. There happened to be two founders. There were a bunch of advisors. They got some shares with that. There was also some employees, and he left some space open for there to be future employees. So here's some stock that can go to future employees. Okay, then he was doing a round. Okay, this is kind of funky here. All right, so here's a round. And at this point, with this first round here, he was saying that the valuation was over $3 million. Okay, so he's gone from $1,000 to $3 million. Everything went up proportionally. So you notice that he doesn't nobody has more shares than they had before. They're just worth more. And then down here, he's showing the money that was invested. So $807,000, which added more shares. And each of the new investors got these shares here. And actually, this was where I was investing this into the next round there. But so for the $807,000, these are the shares that are added. This is the percentage, and everything went up, and life was happy. And then he was doing what he called the Series A, but I was looking at the angel level, and it's much the same idea. Again, things have gone up from the 4 million there to 6 million there. And then after this round, he was saying that the value of the company was 20 million. And that's because he was looking to raise 4 million with this round, and mostly VCs, but a couple of us angels were possibly coming in as well. And so again, what you'll see, so it started out now, he has not had, he's always had the same number of shares. Same number of shares, same number of shares. But what you'll notice is happening each time is the value is going up, but the percentage is going down. So the value, assuming that the company is worth 4 million, then the value is of his shares is almost 2 million. But whereas here it was only $570. The percentage of shares initially was 57%, and then down here was 45%. There's something else I wanted to mention here. As an investor, when you're looking at the cap table, you want to be sure that there is one person who has the power, if you will. You need to know that if push comes to shove, there's one person who is responsible and one person who will take the fall if there's a problem. I'm going to tell a quick story here. I looked at a company once where they had divided the shares equally between three people. That is generally a warning flag for me. You don't want the shares to be equal among three people, because you want someone who is responsible, someone who is going to take the fall if there's a problem. So that was one problem I noticed right off. Then I noticed, so they didn't have any extra shares like to give to new employees or anything like that. That was a problem. And then two of the people were married. That can be a problem. I don't know. In the US, maybe it's more of a problem than in Europe. Who knows? With the divorce rates and all of that. And I've heard it said that an angel investment on average lasts longer with a company than the average American marriage. And so that can be a problem too. You never know if someone's going to get divorced. But then the thing that I would not move forward with at all, one of the partners, so the wife, there were basically two founders and then the wife. The wife, and I love wives, right? I'm a wife, was not involved in the company at all, but she had a third of the shares. And I say, wait a minute, this cannot be. We cannot allow this. And they says, oh well, blah blah blah. No, if she's got a third of the company, we want her to be engaged. Anyway, I stopped due diligence at that point, and I wouldn't talk to them anymore. Um, and they wouldn't change it. They wouldn't modify anything. All right. So I think you get the
Martha,
thing. Sorry? Yes, please.
Martha, I have a question. I have a similar thing right now. So I'm talking to a founder, and he told me that his wife is she's owning shares of the company, although she's not doing anything basically. What do you think is the motivation to do that from a founder's perspective?
I don't know. I mean, I talked with this company. I talked with these founders, and I said, why?
Hmm.
Why? And they says, well, she's really smart, and
Yeah. Okay.
I'm sure she is. I mean, she's
Yeah,
got
she for
a
sure,
company
yeah.
she's not doing anything for. That's really smart. And
Exactly.
I have no shares of a company I'm working real hard for. Maybe I'm really stupid. Uh, um, yeah, I would it now I have seen companies where someone contributed and they got some shares, maybe an advisor, and they got a small amount of the shares, and then they left and did something else. That's okay. That can be okay. But someone who has a significant part of shares and is not contributing, um, that's a problem. I'd tell them, thanks, bye.
Martha, I
Yeah,
had a quick question.
yeah,
Sorry.
Parna, please.
On the same train of thoughts,
Hmm.
how about capital investment? If the spouse, because I mean, generally some families have family accounts,
Right.
but if it's not counted as a family account capital investment, but the spouse capital investment, would that be one of the reasons why the spouse is not shown as a working employee but has an as a share?
Absolutely. Absolutely. If they have contributed capital, then yes, they should have shares. That's correct. But if they have not contributed capital and they're not contributing to the business, thank you, Parna. Yeah, that's a good point. Then that's a problem. So I wouldn't say no out of hand. And as we look at what it takes to get a business going, you need family. You generally need family money. Or you're really rich, which can also be, if you've had an exit and you got $1 billion from it, then you can do whatever you want. But yeah, you want to be careful about that. Now, I didn't really mean to go too much into cap tables, although cap tables are interesting. What what's part of interesting to for me about this is he actually has given a valuation to his company, which is uncommon. So that's one thing at a startup stage, and maybe he did this retroactively. But I mean, if you put in $1,000 and there's $1,000, then that's the value of the company. But then the other thing, so notice that from the first $1,000 to the next time he was raising money, the value of his company went from $1,000 to over $3 million. Why? How? Right?
Wait, Martha, can I ask a quick question?
Sure, please.
I don't understand if he puts $1,000 into his company, isn't that his debt as opposed to his value? Like the value would be the value of whatever he's producing, right? And the average lifetime value of his customer, how many customers he can get, right? Wouldn't that be the value? This just seems what should be taken away from that value.
Um, well, and I honestly don't know where the $1,000 came from. Um, but my understanding was that he put $1,000 into the company and he gave it to the company. And so it was not, oh, did we not get Parna? It was not debt. Okay, but
Okay, okay.
that's an excellent point that we'll get to in a minute here. So somehow he went from $1,000 to over $3 million. And then with the second investment, second amount of after the second round, and he raised again, he went from 4 million to 16 million. Now I understand the 16 million to the 20 million because he basically raised the 4 million. So each time, and so Megan, that's what's happened with the first 1,000 is that's my understanding is that he saw it as an investment. So this I think is very useful, very interesting because he's actually giving a valuation, and most companies don't do that at this stage. But I thought it was very interesting to look at exactly what's going on here. And then Megan, as you were saying, he's at this point here, he's got a certain number of customers, and he's got probably at this point he's got a prototype. Well, and enough of a prototype that it's selling, and he's got income or cash flow or whatever like that. So it's gone from this point to this point, and then it goes again, it quadruples there, and again, each time he's raising funds, the value is going up so that at the end, um, theoretically, it's worth $180 million. All right. But this is in the future. Nothing's really happened with that yet. Um, anyway, okay, so that is possible value over time. So let's come back. I'm going to step back now and let's talk about valuation. So, because he was saying my company is worth $3 million, it makes sense to come back here and to raise $800,000. This is this is a $3 million company. You give me $800,000. I can get to the next stage. This will increase the value, and all of these things will happen. Maybe, maybe not. This is early stage investing, angel, startup investing. We don't know. But the more valuation you have, um, right now, the more money you can raise. Now, in the future, it could make it harder. So if he has the value too high now, and he can't actually prove that it's worth that much, people are going to say, I don't know about that. I don't know that I want to do that. It could also be unrealistic expectations. So he's saying here now that the company is worth $3 million, and that's great if he's got customers, paying customers, and he's got, he's producing whatever product. But if he's still doing a prototype and he doesn't have any evidence of paying customers, that's a problem. And people aren't going to want to give him money if there's no evidence of traction, of things happening. So you've got to be real careful. You don't want to set unrealistic expectation. It can make it less attractive. And it might lead to a down round. So here, he never had a down round. It kept going up and up and up. And so it made sense to raise money, more and more and more money. But if he had to go from 4 million and then the next round, instead of going to 16 million, if he had to go down to 3 million, that would be a real red flag for me. I wouldn't want to invest in that. So you want to be careful about that. The problem with being too low is you can only raise a percentage of what might be coming. That could limit your growth. If you really do need more money, then and you've got everything's going, your engine's going well, you just need to expand to the US or to South America or something like that, then you need the money. And it would be difficult if it's also too low. That'll be difficult in the future. All right. So I'm going to talk about some terms here, and I know a lot of you already know these terms, so I'm sorry if you already know them, but I wanted to make sure to say these words so that to make sure we're all on the same page and it makes sense. So usually, well, let's see. Let me start with the idea of a company versus a deal. So you can look at the company. We've been, and Megan and Stefan, you've also been bringing this up. Thank you very much. When you're looking at a company, you're looking at, do you have customer market fit? Do you have paying customers? Do you have a solid team where you're managing everything that needs to happen? That's the company. Now, when you're looking to invest, then you're looking at the deal. And these are two different things. And as Stefan knows, when we work with Mossy Ventures and we do the Seattle Angel or we do the European version, we separate them. We physically separate them, and we usually focus first on the team, and then we have another, or the company, and we have another group that focuses on the deal. So these are words that have to do with the deal. And so not the company specifically. Usually we determine the value of the company later. So we don't specifically do shares, we don't do valuation. We look at convertible instruments is what we're looking for. So usually it'll either be a convertible note or a safe. And there are other ones. I was trying to kind of simplify it here. So the convertible note is actual debt, as you were saying, Megan. This is actual debt. There's usually an interest rate and a maturity date. So that is really difficult for a startup because they don't know. If you're not getting income and so like if you're a med tech company and you are still doing research and you're still going through the FDA process or whatever like that, you don't have income. And if you've got interest that is piling up, that can be really difficult for you. And so a safe note is what is usually preferred by the company, and it can also be okay. So it's not debt, but it can also be okay for the investor because with it also usually comes control, a bit more control from the investor. And so the safe note can be a win for both the company and for the investor. All right, so kind of key phrases, and it's much more complicated than this. And I'm thinking, as I was writing this up, I was thinking, I really need to do another presentation where I go into these in more detail. But for right now, this is going to be good enough, I think. There's what we might call a valuation cap or a conversion discount. So I'm going to come here. Now, these are actual companies that I have been working with in the past few months. Okay. And then this is a company that I invested in really recently. And this is a company that I'm going to be investing in probably in the next week. Okay. So one thing to notice is there are different markets, right? So there's med tech. Med tech means generally they don't have any income. Here's a real estate, although it's a two-sided market, which is classically tricky. This is data analysis software, biology, AI. What does AI mean? Healthy snacks. Here's a SaaS company. Here's one that does supplements, and here's a social funding. Another thing that can influence. So the same company in one place of the United States can be worth half of the same company in a different place of the United States, or a different place in Europe, or a different place in Asia or Africa, or wherever you might be investing. So I tried to also show kind of different areas. There's several that are in the US, and then several in Europe. One thing to notice about this company is this is actually a European company, but this is the Delaware Corp version of it. So this company has a U.S. base because they're now heading to the U.S. trying to go through the U.S. And get U.S. funding. Actually, a company like this was one of the best investments I ever made. They knew what they were doing. They were very clear. They were just coming to the U.S. They just needed a bit of funding to take over the U.S. They did it. They got the funding, and it was a very powerful exit very quickly. All right, valuation cap. So let me talk a bit about valuation cap. Valuation cap means that if something is sold for more than this value, I get it for this value here. So let's come back to this one here. Here's a valuation of $20 million. And these are all in millions. So this is actually 10 million. So let's say that I invested in this company here when it came up as 4 million. And then it had an exit event, which said it, or a conversion event, which said it was worth $20 million. But when I invested, I had a $10 million valuation cap. So that means that it's 2 to 1, and I get 2 stocks for every one that everyone else gets. So I get it for half price, basically. And I've just doubled my money right there. So that's what a valuation cap is that it's a way it says, okay, even if you get bigger, I grow when you get bigger like that. Okay. So with this one here, this is a 6 million cap. And if they go to 20 million, then I get over 3 times my money. Conversion discount. Another option might be a conversion discount. And so let's say that I get 80%, and that means that for something like this, I get to buy the next round of shares at 80% of what everybody else pays. So for every $1 that everybody else pays, I get it for 80 cents. All right, so that is a conversion discount. Usually you get one or the other, not both. Usually you get the one that is best, whichever one is better. So in this case here, if they actually go to 20 million, and they have a $10 million cap, then clearly that's a better exit. Okay, Sanchit, yes.
Just a quick question on the discount. If it's
Mm-hmm.
like 50% discount, it means you'll only pay 20, right? So the remaining, if everybody pay $1,
If it's a 50% discount, then you would get two for each. Uh,
yeah,
so everybody else pays $1, you pay 50 cents for each one.
yeah, exactly. I think with the example that you mentioned with like 80% discount,
Mm-hmm.
then if it's an 80% discount on the price, then you only pay, if someone pays one, you only pay 20 cents, right?
Oh, thank you. Yes, yes,
Mhm.
80% discount, then you only
Yes.
pay 20 cents. Yeah, I was very good. Thank you.
Yeah,
Yes.
yeah,
Check my math.
yeah.
Okay, thank you very much. Yes. Okay, right. I should have stuck with easier numbers, perhaps. You can also, as an investor, request a most favored nation clause, which basically means that if anybody else gets better terms than you got, you get those better terms. So if, let's say that I did the 50% discount and somebody else then gets the 80% discount, then I also get the 80% discount later on. All right. So those are kind of key uh, ideas I want you to be keeping in mind. Again, these are actual numbers of actual companies that I've been looking at. So they all have a valuation cap, they all have an amount of money they're looking for, and then this is their evaluation of what round they're in. So I usually do very early, which tends to be seed and pre-seed, and this one here said that they were in the friends, family, fools level. One thing to notice, which is kind of interesting with this, is so we've got prototype ready that says that they're friends and family and seed. So even though you might consider them to be the same, they're saying different things. So here's a pre-seed that's in market. They're both in market. Here's a seed with $1 million revenue. And here's a seed that's prototype ready. So I showed this earlier, but you see that depending on where you are geographically in the world and what kind of business you're in and how you're kind of thinking about things, there can be a lot of variation. So it's hard to tell, you could argue. And then this is theoretically the market. And I don't put a lot of faith in what people say the market. You see that there's easily an order of magnitude difference in the size of the markets here. Um, and so this is something that I don't, yeah, it's nice to know generally what things look like. But until I really get into knowing your team and knowing your team better, let's say that the market is $350 billion, but if you're going to get 0.0001% of that, that's not that much. But if you're a team, let's say that you're $25 billion and you're a team and your product is going to give you 90% of that market, that's really a different animal. So that's kind of tricky to tell there. So team is what I usually spend most time on early on to make a decision. Do I want to look at them more or not? And one of the key things I look at now, I look at a lot of different things, but one of the key things I look at is how many exits have they done startups before? How many exits have they done? Because there's nothing quite like doing a startup and having an exit, even if it's a failure, to learn a huge amount. And so for these two here, where they're both newbies, I'm who's on their advisory committee, what's going to help here. All right, so I would hesitate with those. All right, let's look down here. So there are actually probably
Wait, Martha,
dozens.
I'm sorry. I was trying to
Yeah.
find my hand raise button. I couldn't
Oh,
find
okay, yes, go ahead.
so for the TAM, I'm curious, do you rely on their estimates for TAM, or do you have like a tool that you use that you compare their TAM against? Since you're right, you can get varying answers from various people.
Um, I rely on them,
Okay.
and basically I think it's smoke and mirrors.
Yeah. Okay.
So I usually, when we look at what's, what's the market, eh, yeah, yeah, I'm with you. And that's something, thanks, Megan. That is something else that is very important. How accurate is the market? And if you look at, so for example, this here with a med tech, yeah, Sanchit?
Maybe just to follow up onto that question, in terms of the market perspective, do you also look at how they did that market analysis? Is it top to bottom or bottom to top? Because I think TAM can be relatively huge. It's a number, but I think what really interesting is the sum, right? Of how did
Yeah,
we got that number?
yeah,
So you look at that of
yeah.
how the team did it, like is it bottom to top or yeah.
So I usually do several passes before I start doing a serious due diligence. I follow Stefan, I follow the Mossy Ventures way of doing multiple passes. And so
Mhm.
I don't even look at this. I as I say, I think it's smoke and mirrors until I'm getting into the serious due diligence.
Ah, perfect.
And so for example, this company here, and it's actually fairly common with med tech. What they presented is a fairly small TAM, but what their product is capable of is several orders of magnitude bigger. So you can look at a med tech company. Med tech tends to be tricky this way, and it's very reasonable. It's a very reasonable, and this is what you were saying as well. I'm sorry, I forget who was saying it. That, oh yeah, Sanchit, you were saying that yeah, that the lower that the sum or something like that makes more sense. And it might be that they cannot get beyond the sum because of financial reasons, not that they don't have financial considerations that they don't have control over. Whereas this particular one, um, once I got in and I was doing due diligence and understanding it better, it's really much bigger, I believe. But they were being conservative. That's part of who they were. So, yeah, I honestly, while this is considered, some evaluations consider market to be really important. So Y Combinator considers market to be very important. I don't, not at an early evaluation. When I start doing due diligence, that's when I start really analyzing the market. But all right. Other questions? Thank you for great questions. So I'm going to do this method first, and you're going to have to kind of rely on. So I did do their company stage, and I said, okay, I'm going to trust their market, even though I think it's bogus. And their product stage, and you're going to have to trust me on the analysis I've done on their team. So what I did is I took each of these areas and I gave them basically, uh, why am I having difficulties with this?
You have to highlight both of them. and then
I
do one.
do, and that's the difficulty I'm having.
Oh, sorry.
It's thank you. Yeah, there we go. I thought I was so clever in how I did it, but all right. So, and I gave them a value one between 0 and 1. Um, and so, and then in order to have it at about what I thought these companies' values were, I multiplied it by 1.2. So there's a fair amount of hit and miss with this. This is not near as clean as you might expect. And I was kind of stupid with with the team that if they'd done startups before, I gave them a 1, and if they hadn't, I gave them a half. Um, and then the product stage. So there's a lot of kind of hit and miss with this. So I used that and I did that. And the average was about 4 million with a standard deviation of 0.73 million. What's 0.73 million between friends, right? And I'm happy to send these out to anyone who wants them. So that's about what came out for this method one. And then here's a method two, which looks at the idea, the product stage, the team, relationships, go to market. So I did that too. Let's see if I can undo this one. And so I did much the same thing. Again, I did the team the same way. Again, you're going to have to trust that I know what kind of relationships they have and that I know what their go-to-market strategy was like. And so a lot of these are very common. Yes, Sanjit.
You mean relationship? Is it between the team members or?
No, it's what kind of connections do they have in
Ah, okay, the network. Okay.
yeah, what's their network like? Yeah, which I think is very important, although that
Mhm.
can be hard to tell early on. Um, but this particular method has it, and I agree with them, because if you've got the right connections, you can do a lot, and if you don't, you can be dead in the water. Yes, thank you. Absolutely. And your go-to-market strategy. And have you done this go-to-market strategy before, and were you successful? Um, that's really powerful. So in this situation, the main thing that reduced their value is, again, their med tech. They have to go through the FDA process. That can be a real big drag on them. This one here, um, so they have healthy snacks. They've got $1 million in revenue. Their seed. They've proven that they're successful. Um, the cap was good. They're the highest one in this group with this evaluation. Oops, and I think they're the highest one with the other one. And I agree with that. I think those are all really good things. And then the last valuation uh, was just in general, and this can be a lot more at the VC stage rather than the angel stage. That they want to have about 20% of the company, and so I just multiplied it by 5. I just took their cap and multiplied it by 5, and you're going to see that this is going to jump. So let's see, so this one, where did it go? Again, this one is quite strong. But if you look at the ratio, this one here the ratio is really unusually high. I didn't put it into a graph, could have done that. And you'll see that it kind of jumps up, that this is this here. So this company here, which one? This one here. The fact that they have said $23 million for the valuation cap, notice that's over twice what anybody else said. And they're just they're SaaS, but it's just a valuation. It's not like they've got $1 million of revenue. I think they're overly optimistic. It now might be a great company. Remember, the difference between the company and the deal, right? Difference between the company and the deal. This might be a fantastic company, but if I were working on a deal with them, I would say, I don't think so. And I would want them to cut that at least in half.
Martha, sorry, another quick
Yeah,
question over there. I
yeah,
think that is the only one where when you had the two sets of valuations, their valuation went up dramatically when you incorporated, what was it, idea and
right.
product.
Yes, exactly. So where are they? Let me make sure.
It might
Uh,
be the one below it. I might be wrong here, but I'm just trying to line it up.
yeah, I should have made this a nicer. I could have done a nicer job with this, but so yeah, if you look at their other valuations,
Oh no, yeah. I was looking at the one before. See how it goes from 336 to 450? That is a huge jump. Line 9?
line 9. Yeah, that's also a really big jump. Now
Yeah.
at least they're higher there, but
Mm-hmm.
yeah, that's also a big jump. And it's not as obvious, right? Because their cap is really low. And so, and the truth is we don't know, right? But these are well, that might be actually reasonable for that company. Um, and I was going through a lot of people's analysis of how they do this and what they think and how they go through it. And uh and one guy just flat out said, basically we go by our gut. And um I haven't done a lot of deals with people. I'll confess. I mostly analyze the company to see if it's a good company. But yeah, I'd be nervous probably about both of these. Yes, Sanchit.
Oh, just looking at this example, since it's also at this seed stage, and especially with this high evaluation, do you think often that's the case because the pre-Series A or Series A would be difficult because the cap is now too high and there has to be a down round? Do you often see that
I
as a case?
I would guess with this. So with this company here, I would guess that if they can get funding, and I would be hesitant that they can get funding. I'm guessing that they'd have a down round
Mhm.
next time, which and so as an investor, I don't want to be invested in someone who looks like a down round. Looks like they're
Mhm.
going to be a down round. Now, this one here might be too low.
Mhm.
They might want to be thinking a bit higher. On the other hand, they're in the market
Mhm.
and they have cash flow.
Yeah.
And so they're not desperate for money. And so this could actually be a really good deal.
Mhm.
I didn't invest in them.
Yeah.
I would be that their valuation was so low when they're already in market. I would
Yeah.
expect them to have traction. That would be a red flag for me.
Not necessarily, because if they have cash flow, uh, they don't need a lot of money. And maybe they just maybe they just want, so right now they're in Barcelona, and I haven't done due diligence on this company, so I don't know a lot about the details. But it might be that they just need just a bit of money. And you look at what they're looking for. They're not even looking for $1 million. I did convert from euros and that sort of thing. But so they don't want a whole lot of money. And that's why I think they've got such a low cap. And maybe they just want to go through Europe. Yes, Sanchi.
And
Maybe just a
Martha,
question. Yeah.
Martha, can I ask you a question on that one? It just looks like different industries. So how do you factor in, future growth, like the CAGRs of the segment they're in? I think like supplements and SaaS is at a very different probably market growth trajectory there.
Exactly.
And so how
Exactly.
do you factor that into your decision making process, I guess? Because looking at this pre-seed at 15 billion TAM is obviously dramatically different than a 70 billion, even a 70 billion TAM. Some could argue a SaaS company can probably go for much higher.
Yeah, maybe so. Oh, I'm sorry if people are, I'm kind of ignoring the chat. Absolutely. So you need to consider the market, what area they're in as well. You also need to consider where they are geographically. And so generally, a talent company is usually more than a Barcelona company, and yet this one is lower. So there's something wrong, and I think there is something wrong with this company. Um, whereas, and London in general is going to be worth more than Barcelona. And so that is what I'd expect there. Um, that, so we can go back to um, we've got nobody knows, right? This is very high risk. Nobody really knows. There is no algorithm, there is no process that's going to guarantee anything. Sorry. I'm trying to show you things to give you a sense of what things might look like. Okay? But yeah, think about so medtech versus so supplements. This is supplements, they have to actually produce something. And this is what you were saying, I think, serious. Whereas a SaaS, once they've got the code, you just send it out, right? And that's easy. Sunsheet, yes, sorry.
I'm not sure we have time, but maybe just a question to have your insight, especially when it's connected to the gap and the instrument. What you were mentioning earlier with the CLA, the convertibles. Um, it often's time that there is a cap on convertible with the maturity date, and when that date expires, it's a down value, right? So
Yes,
for an example,
yes,
yeah, the
uh,
example 2.5, and then it's 1.5 if you don't raise in
yes,
the time frame. Do you
absolutely.
often think
This
that?
is this is very, very brief.
Yeah.
Yeah, right. This is nowhere near the we could spend hours just talking about deal things. Thank you, Sanjay. Yes. And I'm fine with going over time if you need to be leaving. I understand it is time. And that's yeah, this is and perhaps that's another presentation I do. Oh, people are in the chat and they're 9 short. Yeah, go ahead, Stefan. Yeah. Need to drop. Okay, thank you. All right. Great. All right. So thank you very much for attending. I'm happy to stay and chat if you want to do that. But if you need to be going, I understand. Yeah, because it's middle of the day for me, and I don't have my next meeting's not for several hours. If you have any questions, anything you want to go with, if you would like to receive any of these files, I'm happy to send them out. Maybe I'll just send them out to everyone who's registered. And
I would appreciate that. Thank you.
all right, absolutely, Megan. Kyle.
Yeah,
income.
thanks, Martha. That was really helpful for clearing up some things. I'm just curious. So, again, in my situation, I'm pre-seed. Would you say in that case, I'm not trying to raise millions.
Mm-hmm.
Like safe notes are kind of the standard, gold standard for when dealing with kind of the pre-revenue stage type of companies.
Yes, yes. Safe is fairly standard. Yeah, that's it's kind of balancing between where'd I go? Yeah, here. The needs of the startup and the needs of the investor. So on the one hand, it's not debt, which can often debt can be a real problem for a startup. On the other hand, it usually gives the investors a bit more control over the company. But that's something you can negotiate after you wow them with your amazing team and product, right? Good. Yes. And I do want to reinforce this is really tricky. And in some ways, this file here is really impressive. But on the other hand, what on earth did they do to go from 1,000? So this is almost 2 orders of magnitude growth. And maybe they did. And we're not seeing it here because this is the cap table. But you would want to check if you were investing, you'd want to check. And if you were presenting your company, you'd want to be able to say, well, so we went from ABC here to whoa, all of this here, and clearly we have we are worth that much more. And really, you should be thinking about when you are looking for money as a business. And don't just look for money to look for money. This is probably my number one advice to companies that I mentor. They say, will you invest in my company? And I say, no. And they go, oh, okay, but I'll mentor you. And then I'll get them to the point where I'd be willing to invest in them. And then sometimes I invest in them. But you want to be thinking about, oh, why do I want money? What is this doing for me that I can't do any other way? So if I can do this without raising money, I generally think that's a better idea. It is getting harder to raise less money. So you used to be able to raise, I mean, well, no, 2% of the population, 2% of people who go for angel investing get it. All right. So the odds are against you. Um, if if you can if you can do what you need to do without raising money. So the odds are against you, and um, then you're giving away your company, right? So you're giving away 10% or whatever of your company. Now, if you're making that much growth, awesome, that's worth it. And twice, if you're doubling, then that's worth it. But if you're just trying to pay your salary so you can survive next month, that might not be worth it. That might not be worth it. And if you're in a situation, uh, uh, so I mentor companies in the U.S., in Europe, in Kenya, and in Taipei. Okay. Um, in the U.S., all of the companies I'm mentoring in Taipei and Europe are getting government money. None of the companies I'm mentoring in the US and Africa are getting government money. So the advantage is if you're in Europe, chances are you can get government money. The disadvantage is maybe that's not motivating you to move forward as fast as you need to be doing. So really, I recommend you get paying customers. That does two things. That gives you cash flow. Awesome. And as an investor, that makes you more appealing. Now, Simona in med tech,
We, we are starting a digital platform to get revenues. So
there you
also
go.
for us, not just for
There you go.
investors, but we
Yeah.
need the revenues. It's a normal deal.
Yes. Very, very good.
But I appreciate, yeah.
So for many, many years, I would not invest in med tech because it scared me. And many investors will not invest in med tech because it's scary. The first med tech company that I invested in, they had sales in the veterinary market. And I said, well, even if they don't get through FDA, they've got all of these sales in the veterinary market. And so I invested in them. And then it was just a slippery slope after that. And I've invested in more and more because it's so interesting. Um, I love, I love med tech. It's just so interesting. But it's very high risk, and I have not yet gotten a return, even with the one that was in veterinary medicine. But they have now gotten through the FDA process. They got through the FDA process, like I think last March, April. So, where's my return? Where's my money, right? uh, but I also one of the reasons I like angel investing, and I believe in angel investing, is I hope that there's a closer connection so that if there's a problem, that my companies will let me know and we can do something to solve it rather than just, I know a lot of VCs, they're looking for the 10% that are going to be successful and they don't care about anyone else. And if you're having troubles, they don't want to hear about it. Whereas what we do, excuse me, and in general in angel investing, I think of us as a team that we're doing that. We all want this to be successful.
Important.
Yeah.
I have another quick question, Martha.
Yeah.
Oh, or were you going to say something, Daniel?
Oh, no, no, it's okay. It's okay. Go ahead.
Okay. I was just curious. I mean, maybe you're biased in the sense that you founded an angel group. But how do you view the approach to an individual angel investor versus going towards a group of angel investors in
Yeah.
terms of approach or?
I almost never invest alone. I think once I invested alone, and it's done very well. But okay, and so yeah, I believe in groups because then I've got the input from everybody in the group, and it's not just me. And I have the money from everybody in the group. So remember, one of the ways of analyzing and getting the value of a company is by the connections you have, the professional connections you have. And if in addition to the connections you have, you've got 20 angels and their connections, think of what that does for you. And so the more, I think, as a startup, I think you want to be part of a group, and as an investor, I want to be part of a group. So there's kind of a dichotomy. I don't know if that's the right word. Um, that's not the right word, but
Synergy?
maybe it'll make sense. On the one hand, as an angel investor, you want to have as much diversity as possible in your portfolio. On the other hand, as an angel investor, you should only invest in what you know really well. What's that called? It's not, anyway. So investing as a group allows me the diversity and the expertise.
Mm.
Even though that might be is it contradictory? It's a contradiction. Who made up this language, right? Anyway, all right,
Let's
so
go back to Latin.
yeah. Yes, of course. Daniel, you had a question?
I guess my question, I was just quite interested just listening to what everyone was saying, and I'm more like I like to listen more than just take sort of insight. But I think I think for instance, with my company, obviously we managed to bootstrap the whole thing and get it to market. So
Yes,
we've never had to obviously get an investor. At
right.
the moment, we are speaking to one investor who
Hmm.
obviously it is my first time having to then demo to them and show them which went great. And then they recommend me to obviously speak to an insurance company for them to merge with us so that anybody, because my platform is within real estate. So anybody who's going through the application process, they can be insured, uh,
Okay.
which is what we are going through at the moment. So that's why I just want to understand like what was that conversation going to look like, what how, because obviously we're still proceeding, obviously we just launched as well. And you mentioned earlier about the go-to-market strategy. So it was when I was in a meeting as well with the VC, and I'm starting to learn a lot and got into like how, because they know a lot about real estate. So they have a different agenda of how they want to take the product to the market. My idea is working with individual estate agency, which obviously we don't have the manpower for that. Obviously, we need funding for that, but they say that they can take it to the developers, which will have hundreds of properties. So, um, I guess my idea would just like to sort of understand, like, I wanted to sort of keep my options open, so I just don't want it to be tied to one investor. And this is why I'm learning the law and speaking to people that just sort of show them products because um, for one, I'm glad that obviously we didn't have to get investors
Right.
to build a product. And
Right.
two is even though we don't get investor now, we can still get to the market and onboard few customers and businesses that they can start using it. But I wanted to explore also the investor route, sort of see, where that can get us to, because the goal was obviously to be able to grow bigger outside of the UK and then scale to America. Um, yeah, so that's why I'm just sort of listening, so I didn't have a specific question.
Okay. Yeah, I was going to say, do you have a question, or did I just miss it? Um, you are actually, I'm really glad you shared that because you are an excellent example of what I normally advise companies to do.
Right.
Uh, one. Two, ask yourself, what is your goal?
Mm.
Why are you doing this? Is your
Yeah.
goal to make as much money as possible and you don't care how that happens, even if you have no control over the business? Or do you enjoy this? Is this something you enjoy that you want to keep doing over time? And yes, you'd like to make money, but you can make a fair amount of money without having to give up control of the company. So, think about, why are you doing this? What do you really want? So, do you want to make a huge amount of money and have control, which may not be possible, might be possible, but might not be. But it might come to a point when you have to choose, do I want control over my company or do I want money?
I think for me, I obviously want control. Obviously, I want money as well. But obviously, my partner, however, wanted to grow the company. And obviously, if someone come on board and wanted to acquire us, then they would consider that. But for me, I'm sort of reluctant to be like, I still want to stay on and work on it. But
That's
it's just a
clever.
conversation. It wouldn't mind. But I think ideally, I would want to stay in the company and obviously still be able to make fairly with good money. And obviously, if you have investor, be able to get their investment back for them. So that's why I enjoy working and just sort of building it. So I don't think I will ever
And
sell it not work.
then you, and I don't know exactly where you are with your company, but you um if you need money, let's say you're going to go to the US,
Yeah.
and if you need money to do that, if you can't do that out of cash flow,
Yeah.
I would recommend that you look into angel investors
Mhm.
and building relationships with angel investors, because they tend to be more have more of your vision. Now, that's not always true. I was talking with someone recently, and they weren't an angel investor, but she partnered with someone, and she partnered with the wrong person, and he basically took over the company. And she said, "What do I do?" And I said, "Take the code, take your connections, um, take the, she had an IP, take the IP, it was in her name, give him the company." Because
That's everything.
what is the company without the code or the
Mm,
IP or her
Right.
connections? It's nothing. Give it
Yeah.
to him. Let him have it. And then, because she was actually in a position of power, and she would have had to start, with a new name and that sort of thing, and she was going to lose things like that. But if she tried to fight this guy, she'd have lost everything, I think. Um, and so, yeah, you want to be real careful who you connect with, who you. Um, I mentioned this earlier in this presentation, that the average, I've heard that the average angel relationship lasts longer than the average American marriage. I don't know if that's true or not. I've been married 42 years, so I hope that I don't have any angel relationships that long. But it's a relationship, and that's what you want,
Yeah.
I think.
Yeah.
So when Mossy Ventures, when we do our rounds, our goal is to help everybody move forward.
Yeah.
We want, for the companies, we want you to meet as many angels as possible. We want you to become more investable, or to understand how to be more profitable.
Yeah.
You know, as an investor, we want to make sure that we want you to make good relationships with the companies.
Yeah.
We want you to make good investments, but more importantly, to be making good relationships.
Right.
And so we're pretty unique in what we do. Our goal is not to make money. Whoa. What is wrong with us? Our goal is to build the healthy community so that everybody makes money,
Yeah.
so that everybody wins and everybody moves forward. So I had a meeting earlier today with, there's a company in Kenya that I'm working with, and he's going to do a presentation for me. And he said, "What kind of presentation do you want me to do?" And I said, basically what I just said to you guys. And can you say how that can be done in Kenya so that investors from London, from Europe, from the US can see how to do this broader than just in your little neighborhood? Because that's a win for everybody, I think. My best investments are in Africa.
mm,
Financially, my best investments are in Africa.
mm,
And I I think I like to think that it's also good for the world to be empowering emerging nations and emerging companies like that.
Yeah, I guess like for me, just one point I wanted to say was, I think for now is I'm focusing a lot more on the relationship with Angel and VC because I wanted to build a sort of like a portfolio so that, obviously now we are doing the merging. My partner obviously currently doing the API stuff, but once we able to launch and obviously have our customers, by the time we get in front of investor, would have had some sort of traction.
But
Uh,
but I think you're going about it right. One of the companies that I'm mentoring, she's not really ready for investment, but she's building her community of people who she's building relationships. She's really good at building relationships uh, with people so that when she is ready for funding, and the way she described it, she says, I'm not building relationships with funders, I'm building friends.
yeah.
And she's just building this community and people who are interested in what she's doing, and she's having fun. And her government is supporting her, so she's not desperate.
Look at
If she
her.
were in the US, my US person is going, how am I going to eat next month? um, so she, she can afford the time. Her country has actually been very generous for her. So
So,
she's,
just question for you, last question before obviously I leave. So regarding to say once you or if you're looking for an investor, you want to speak to an investor, what is the best route do you recommend to go about it? Do you like reach your connection or do you like, get people to introduce you or just sort of
yeah, I'm probably one of the few investors in the world who will respond to a cold email.
right,
Um, most do not. So you want to have a safe space where you can meet people, and that's part of what we do with our program.
right,
Is we give you a safe space to meet investors, an
right,
opportunity to meet investors. And um, I was talking with someone, and we usually have like 60 companies and ideally 40 investors. And then it's an opportunity to meet 40 investors. I was talking with a founder, and she was saying, "Oh, 40 investors. Oh, but they might not invest in me." And yeah, that's true. They might not invest in you. um, but it's an opportunity to meet people. And Daniel, it sounds like you're in a good situation where you can be building the relationships and you can get to
right.
know the people. Um, and and you don't need it right now, but you can be building the relationships.
Absolutely.
Uh, and you have a so one of the people I'm working with, one of the companies I'm working with, is they have two different mailing lists. One is for customers for their product, and then one is for people who are interested in what they're doing. And so one is, remember I talked about there's the company and the deal.
Yeah,
But so one is the customer. And then one, you want to look at the company. As an investor, I want to look carefully at your company. And so that's that group of people she's sending out, every month she sends out an update about how the company is doing,
mm,
so that when she does go looking for funding, she has a bunch of people who already know her company, are interested in what she's doing and how it's going. So
good.
she's working to build the community that
Yeah,
care about what she's doing and want to support it.
mm, that sounds good. Yeah. Thank you so much. Really appreciate
Yeah,
it.
absolutely. Thanks for coming, Daniel.
Definitely look to stay in touch and once you are live, I'm quite happy to watch out.
Great. Good. Glad you showed up.
Yeah, thank you. See you.
Hey,
All right.
yeah, Daniel.
Bye-bye.
Thank you.
I had one last question, Martha, before you
Absolutely.
go, if that's all right.
Sure.
And be brutally honest with me, but you know a little bit of my situation, but do you think being a solo founder will work against me in terms of recruiting investors to come aboard? And if so, going to find a co-founder seems very uh what's the word?
Yeah.
Gives me a bit of anxiety.
Risky, risky. Remember, there are three things I'm looking for: team, team, and team.
A team
Uh,
of one, does that work?
yes, I would say that it will count against you.
Hmm.
Because um, for a couple of reasons. One is there is more to do in a startup than one person has the skills to do, even if they never sleep and have the time to do it. And then secondly, if you can't find one other person on this planet whom you can work with, what does that say about you? Um, but it's, but also at the same time, it is very risky. And I told you the story of the founder who's giving her I don't know if she took my advice or not. I asked her to let me know what happened, but I didn't hear back from her. I hope she's not trying to fight him. I just think that's a big mistake. And I that happens fairly regularly. You think you found a good partner and they don't work out for whatever reason. And then it's just at best to cut as soon as possible. It's like you're dating, right? Yeah, I don't like this person. Don't cut 10 years later. Cut right now as soon as possible. So, you, yeah, not that I haven't invested in solo founders. So it's not impossible, but it does count against you.
Hmm. Hmm.
And you, sooner or later, you're going to have to expand. If
Hmm.
if you're a startup, if you're going to, if you're going to scale, you're going to have to. So another one of the companies I'm working with, she is really gifted in bringing around her amazing people. She that when I first started working with her, I said, "What's your superpower?" And she says, "Oh, I bring amazing people to me." And I thought, really? But she does. I mean, she really does. But then she started hiring employees. And the first two people she hired were a mess, or it did not work out. And it was very expensive to do that. So we had to talk about how she could work around that, which was kind of interesting. That if she's not paying them, they're great. But the minute she starts paying them, they're horrible.
Hmm.
I think it might be that she doesn't like being a boss.
Hmm.
She likes being part of a team. And as long as she was bringing people in as a team, it was fine. But once she started trying to be a boss, it was a problem. Anyway,
Hmm.
that's
Hmm.
neither here nor there. Um, so yeah, you need to think about who might work for you. The advantage is in this day and age, you could have a partner anywhere in the world,
Hmm.
right? Don't limit yourself. Where are you?
I'm based in Italy, but the company
In
is Delaware
is a
based.
Delaware Corp. Yeah, yeah, that's right. Um, so you could get someone in Ukraine. You could get someone in Kenya. You could get someone in Taipei. Uh, these are these are the places that I have found people I work with, and um, it ideally it's someone you've worked with before. Um, Now you're in academia, right?
Hmm. Yes.
So I've been in academia for much of my life, and academics don't play well,
No, not very
right?
kind with each other.
yeah, you've worked very hard to distinguish yourself from people, not really hard to build a team.
Hmm.
And in
Hmm.
fact, there's a company that I would not invest in because it was three academics. And I
Hmm.
mm, nope.
No.
I know enough about academia to know that you guys are not going to play well with each other. At some
Mm,
point, this is going to be a mess. You all have your tenured positions that you can fall back on. This is just going to fall apart. I
mm.
see that happening now. Um, yeah, and so yeah, I wouldn't invest in them. And I had a real big argument with someone about that, but I said, I know too much about academia. This is a problem. And
Oh.
so yeah, I don't know how else. I don't know if you're engaged in a singing group or I don't know, you a gaming group or some sort of group that that you could work on building a team with.
I appreciate that. It's not something that I put a lot of thought into as of yet because my head has been down, trying to build.
Yeah,
And now that we're in the market and we've had some traction
yeah,
and
yeah,
at least for me right now the missing piece is really the paid customers, which is what we're working on in the next month or two
yeah.
with some
Good.
pricing experiments and things. So I never really thought about it, but after this hearing everybody talk, I'm like, and I saw your spreadsheet about, team, 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 and I thought, well,
Oh,
maybe I
oh.
should get a team.
You should get a team. Simona knows about team. She's got a team, right?
We have to. We have to. Without a team, it's impossible. But
Yeah.
it's difficult, let me say. We started it two co-founders, one academic. After 4 months, she decided she preferred another project. But it's different research or startup, of course.
Mhm. It's very different.
But it was good for us because it was an early so we
Yeah. Yeah, yeah. It
the
was
project
cut
man
early
yeah,
on.
yeah, the
Yeah,
project manager that was an employee, he was the right guy for us, and now he's the co-founder. So
good.
but
Yeah.
it's it's the most I believe I really appreciate this point. It's all team is all is
Team
all
is everything. Yeah.
is
Yeah.
everything. Yeah, is everything.
Hmm.
Yeah.
So,
No.
Kyle, I want to hear next time about how you're working to build a team.
First you'll hear about our paid customers,
Oh,
and
okay. First
that,
get paid customers and then worry about a team.
yes, you will hear about paid customers, and then
It,
I'll tell you about my first investor, and then I'll start talking about my co-founder.
and it can be so I'm a co-founder with my husband,
Mm.
and the third person we're thinking of bringing on is our daughter.
Hmm.
Now, would I invest in me with a married couple and a daughter? Probably not. Because I don't know how, I mean, you say that you get along, but, and I can say, well, we've been married over 40 years. Come on, we've been together 45 years. What is this? But yeah, I don't know that I would invest in me, except if I didn't know me. So yeah, it is tricky. It is tricky.
Hmm.
And I know that we're committed to each other and we're committed to this business and we're not looking for outside funding.
Right.
So that makes it easier.
Yes.
I don't have to impress anyone.
That's brilliant, really, really helpful for me. I don't have any other questions.
All right. Great.
But it's nice to catch up and to see you, and I'll keep on the lookout for more of these workshops. They have been really
Yeah.
helpful for me. So,
Good. Good. Yes. That is my so it's about noon, I guess 12:30 for me now. And that's the next thing on my list is to I've got them kind of out at least in a summary form, and I need to start really putting the rest of the events together seriously.
mm.
All right. Great.
Yeah.
Always
Uh,
lovely to chat with
Marta.
you.
Thank you, Kai.
All
I'll
right.
see
Bye.
you. Good to see you, Simona.
Thank
Ciao.
you. Bye.
Ciao.
Ciao.
Right.
Thank you, Marta.
All right. Bye-bye.
Okay. See ya.